The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions you'd like to ask, it's 877-927-6648. We got the Dow up 20, NASDAQ up about 18, the S&P's up about 5, and we have the FOMC meeting today towards the end of the day, which will mean probably some more bullish impetus to the market as we approach 16,000 again in the Dow. Well, we've been up there 3 times now. Over the past few days, it's almost a mortal lock that it's going to go above 16,000 at least. I'm expecting some type of a blow-off. Maybe it'll be today. You know, we'll have to wait and see, but we're coming very close to that November 22nd date, which is, as my little calendar shows, 2 days away. So we're getting into that zone if, in fact, these aspects that we're looking at are going to catch hold. We'll wait and see. I posted the chart. The first chart I posted was for Home Depot to show you that we made a big butterfly pattern in that 2 days ago, and the market has started to reverse from that point. But the second chart that I put in, I think, is very, very important because it's the gold-silver index on a weekly basis, and it shows, you know, this market has been coming down for 3 years. And with the breakdown that we're having in gold and silver today, with silver going below 20.50 per ounce and gold going below the 12.57 per ounce, that's telling us that both of those metals are heading lower, in my opinion, by looking at the charts. And remember, it's all looking at the chart. It has nothing to do with any fundamentals of any kind. But this gold-silver index is just tremendously bearish. It's trading at around 90. The old low we had was around 82. It's had very little rally at any time over the past weeks, and so it's telling you that these prices, these metals, metal mining stocks are going lower. That's what's the real quagmire for me to understand is that if the economy is that good, why wouldn't these commodities be being purchased by the companies that manufacture the products from where they come from? You know, copper, electrical wiring, whatever it happens to be, silver, gold, you know, just about every market that we're looking at, corn, wheat, you know, all of these markets are getting hit very, very badly, which is usually a sign that the economy is not turning around or is not doing very well. This is what happened in 07 and 08, but it is different this time. See, so that's the whole reasoning behind it. So we'll see what the final tally is going to be, but we'll see from this level whether we're going to start a new bull leg in the stock market from this level, or we are going to see some type of a correction. We're seeing more and more people are talking about the possibility of the C word, of course, which is crash, and a lot of them base it on the fact that the margin debt is as high as it's been since 1929, and whether that's true or not, I don't know. And of course, the figures that we get from the Federal Reserve, they must be correct because they know what they're doing. So I would assume that all these figures are really correct, and I'm the one that's wrong, which is probably the case because I'm wrong quite a bit. Anyway, that's what it looks like with that gold, with the gold silver index. But I wanted to also show you the physical chart on both gold and silver, so you can see, how badly the charts look. Even gold had held up really relatively well here over the last several days at that 1270 level, but last night, at around 3 o'clock in the morning, New York time, the gold broke below the 1270 level and went all the way down to the 1255 level, 1256, and it looks like it's heading towards the 1180. The 786 retracement on the gold comes in at the 12 32 level. So we're only $30 away above that. The gold is still above the 786 on the daily. That comes in at 1232, but the silver has shattered it again. And silver has been a little pretty good indicator that if it's not going up, neither is gold. So whether that's going to continue or not, we have to wait and see. We've had a little bit of a rally in copper of about 3 or 4 cents over the past few days, and it gave 2 cents of that back yesterday. But it also has been under pressure for a great deal of time. Now, on tomorrow's commodity show, we're going to have Rich Anderson of Anderson Capital Management on to discuss the corn market because of the indications that we've had from the EPA about what they're doing with ethanol, which will have some effect on our gasoline prices, because gasoline prices all across the Arizona area and New Mexico and Texas are under $3 a gallon. It's easy to find gas at $2.97 a gallon. We haven't had that for well over 9 years, so it's telling us that the price of gas is coming down, and maybe we have some deflation that is occurring, and that might be the thing that would be causing the Federal Reserve to be a little bit concerned about whether we're going to have inflation or deflation. There are 2 stocks that I follow all the time because I use their products almost daily, and the first one we're going to look at because they look so very much alike is Amazon. And as you can see, it had a huge gap in late October and has gone up, and it's been churning around in this area of $360 a share for quite some time. What's interesting about this chart is that it is very, very similar to the chart that we have for Google, because Google is trading at above $1,000, and it has the same type of pattern that we have in Amazon. The reason why I'm bringing this out is because we have so many people that are bullish the market, and when this stock these 2 stocks have been the leader, and when the leaders don't keep charging ahead, that's usually a sign that the market could be getting just a bit tired. I know this time is different. I hear that every single day. I get emails from everybody, not everybody, but a few people, about telling me why it's different, and I certainly respect their opinion. And but usually it's not different, because when we have a tremendous number of bulls like we have now in the market, more than 55%, and less than 15% bears, along with margin debt the way that it is now, this is not the time to be long the stock market. Years ago, back in the 20s, there was a man named Roger Babson. He was the equivalent of the Warren Buffett of that era, and he warned of the stock market top in 1929 starting in late July, and he warned every week about how bad the situation was in stocks and how dangerous it was. And of course, it wasn't until September 3rd of 1929 that he proved to be right, and it started to go down. Now, I'm not saying that that's what I'm doing. I'm just saying this market looks really toppy, and I have not seen a more bearish pattern in the stock market in all of my years of looking at the stocks as we go through this. So it's just it's really it's amazing to see how these things actually turn out during the as you go through looking at them one by one. Now, what I wanted to show you today is we've had a pretty good rally in stocks. We've almost made a new high in the Dow Jones. The NASDAQ has rallied about 50%, and the S&P has rallied to the 61%. But if you take a look at the New York Stock Exchange Index, which is the broadest of all indices, we've barely made a 50% retracement in that over the past several days after we made the top and then came down a little bit. This market looks like it's rolling over, folks. I was listening to Basil on his show before, and he's pointing out to some things about lower peaks and things like that. These are things that we look at when we're watching pattern recognition, and we're starting to see it in stocks like Google and Amazon and even Apple. Apple should be trading at around the 565 level completing that big ABCD, and it just can't get out of its way at the $530 per share level. So this telling us that we have a potential that this could be rolling over, and whether it does or not, remains to be seen. It's just showing us that we are having some weakness coming into the market that we ordinarily we don't see, that often. But the gold market is the one that I follow very well. I trade it all the time. In fact, once it broke 1270 last night, I put a small short position on. But if you look at the long-term chart on gold now, you'll see that the 786 retracement comes in around the 1232 level. But if that fails, we're going to go back down and test the weekly Fibonacci level at $1,170 per ounce. And this market's in a very steep downtrend. I mean, you might be able to pick a bottom in here, but it certainly doesn't look like it's going to come until at least hits the 1232 level. That's the main thing that we're looking at. One of our listeners here at TFNN asked about all this money that's coming in on QE3 and QE2. Folks, let me explain something to you really in simple words. Hey, dudes, we don't get any of that money. They never sent me one dime. They didn't send anybody in my family one dime. It goes to the banks. What do? I guess they lend it out at 6% because they pay nothing for it. But they never sent me any money. I didn't send Tom O'Brien any money. They didn't lower the credit card costs on anything. No, they didn't do any of that. So they're flooding the markets, buying bonds, trying to stimulate the economy. And remember, this is a giant experiment. And if it doesn't work, we're in deep trouble. That's the bottom line. That's the only thing that you can really do. And so the only thing I can say here is that you've got to be able to really watch what's happening in the charts to see if, in fact, that they'll get a move higher, which I expect the Dow after this FOMC report meeting to get to the above 1600, because it didn't back off. We went up there and stopped at a certain level of about 15. We hit 1603, then we backed off a little bit down to just about 15,900, and so we had a 100-point swing there, and nothing really happened. That's basically the bottom line. So all I know is I look at this chart and it don't look that good to me when I look at the stock market. That's the bottom line of what I see. I don't know too much more than that. It's going to take a little break here. The Dow's up 25, NASDAQ up 18.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted a chart for the VIX index, the volatility that measures fear and greed. And as you can see, we're way down here in the greed section because no one believes that the market has any potential to go down. As you can see, just looking at this thing on a long-term basis over a year, what's happened. But if you were to go back and look at it on a weekly basis, you would see that we are at levels below where we were, back in 2007. When the market was on its way a lot higher. So there is a tremendous amount of bullishness, which they should be because the market's been going up, and it's been an easy market to buy and just hold on and see if things keep going higher and higher and higher. We'll have to see if this is going to continue, forever. Usually it doesn't, but this time it might be different. It's been doing this a long time, and there's always an aberration somewhere, and this might be the one where this QE3 finally kicks in after 5 years, whatever they've been doing, 3 years, and it finally kicks in, and it makes the consumers start to buy, and the people that make the products start to hire folks, and more people have jobs. But here in Tucson, Arizona, folks, the job market is not a good place. There's not many people where good jobs anyway are hiring. Menial jobs, like being a commodity trader and stuff like that, they're a dime a dozen. But the other jobs, like brain surgery and things like that, those are the ones that are, fully booked and in short supply. So there is no fear in the market as of yet, but we'll wait and see if we get to that point down the road. I wanted to talk just a little bit here about the bond market because we've had a really important move last week that we talked about, and that is that we came down and made a perfect 61% retracement, and right at the 131 level, we were able to rally up to 133, 2 points. We backed off half of that, already. And I've always asked myself the question: if the Fed's in there buying all of these bonds all the time, why aren't these bonds trading at 160? That's what I just don't understand. But that's the fundamental part of this, and I don't do fundamentals. I only do the technical part of it. So that's the reason why I probably miss, some of the news or whatever it happens to be. But this level of 131 is very, very important. So that's pretty good. We talked a little bit on Monday about the Nikkei, the Japanese market, the fact that it had that big move last week where it was up 7.3% for the week, and of course it stopped right there and turned around along with the dollar yen, and so both of those have started to turn. Whether that's going to affect our market here or not, but believe me, Japan is not our market, folks. That's a very small market compared to what we have here in the United States. Their population is not any near what we have. It's a very congested, tightly knit little community over there, and so you can't really compare Japan with the United States. I know they have a large economy, but to compare them is really not a fair assessment. We could compare better with China because we're the same geographical size, except that China has a whole lot more than some of the other things that we have. In other words, they have 1.4 billion people, and we only have 380 million. So that's the real difference. Now we're going to go to the foreign currency markets here before the break because we hit two really important levels today in the euro and in the British pound, and we've had some pretty good sell-offs occurring. The British pound hit the exact 786 level at the 161.70 level this morning, and the euro yesterday hit the 135.80 level and has broken 150 pips in a matter of a short period of time. Now we have the FOMC meeting today, which will definitely affect the market. I don't recommend anybody being in positions during the FOMC because liquidity dries up. I mean, nobody likes to take the other side of it, and so the spreads are so wide that it's really silly. Wait for 10 or 15 minutes till after they're done talking and lying to each other, and then you can go in and trade because, by then the news and the crazies are out of the market. They're already hurt themselves or done what they're supposed to be doing. So that's the main thing. So whether it's going to be, it's not an FOMC meeting, it's just minutes, but, that's the minutes of what they were talking. Dow's up 22, NASDAQ up 17.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.
Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we have a question from the Tiger Den about why I am so infatuated with trading Forex, the foreign exchange. It goes back to 1972 when the Deutschmark was trading at about 25, I believe, and Nixon took us off the gold standard and basically let the dollar float free. And what happened was it basically brought inflation, to roaring levels. And the Forex community was basically 13 large banks. The largest ones were Deutsche Bank and Citibank and Royal Bank of Scotland were the three big ones. And then through the years, starting in around 1990, smaller Forex banks began to pop up because they were unregulated. They're still pretty much unregulated by anybody, but basically what it is that they buy and sell money, and they're buying the dollar versus the euro. The six major cross rates, of course, are the dollar, the pound, the dollar, the euro, the pound, the yen, the Canadian, the Australian, and the Swiss. Those are the ones that are major. And then they do cross rates. In other words, the pound versus the yen is also a currency. The yen versus the pound is also a currency. The euro versus the yen is a currency. And so you have many different possibilities. And with 22 cross rates, you can imagine all the different possibilities that you can have. They give you margin that is just unbelievable. Sometimes they'll go as high as 400 to 1 and run away from anybody who gives you that kind of margin because, you're going to get hammered pretty badly. But Usually it's around 40-1 margin. Your commission on it is usually on the euro, it's about 1 or 2 pips. For a small account, it'll be 2 pips. Someone trading, large size, $500,000 or so will pay 1 pip. The British pound, the spread on that will be a little bit bigger, and then also in the yen it'll be a little bit bigger. But the main reason why I follow the foreign exchange is because it follows the patterns better than anything that we trade. I mean, it follows the ABCD patterns, the Gartleys. They're just unbelievable how well they do. I posted into Tiger TV the dollar yen that we were trading last night. We were selling it up around the 100.25 level, and it broke down $600 to the 99.80 level, which was a perfect 61% retracement level. We also did the Canadian dollar. I've already posted the one for the British pound, and I posted the one for the euro, and every single one of them, all 5 of them, worked very well, and they were all from different countries. So it makes a really good thing to trade. I mean, everybody gets infatuated with the stop and P, and believe me, that thing is not nearly as fun to trade as the foreign currencies, and it's not affected by the Fed. The S&P is, of course, but the foreign currencies won't be affected by the Fed as much as you'll get with the S&P 500. The amount of trading that goes on in Forex is thousands of times bigger than the stock market. Not just hundreds, thousands of times. We're talking 2 and 3 trillion every day just trading in these currency markets, and they're huge, huge markets. When you see these numbers coming from Morgan Stanley and J.P. Morgan and Goldman Sachs, where they haven't had a losing trading day in a whole quarter, most of that is because of the spreads that they make in the foreign exchange markets, because they take that money as a spread. They buy one side and sell the other, so it's a win-win situation for them. So that's the main thing that you can see, that it's really unbelievable that how well these patterns work. Just practice it yourself. My good friend Jim Twentyman always used to say, defy human nature, do the work yourself. Go in and look at these Forex markets, and you'll see that they have these patterns repeating over and over again with such regularity, like it's unbelievable. Like when a market is trending really strongly in something, you're going to be able to go into the Forex market and find a market that's making some nice ABCD patterns. It's just that simple, and that's the beauty of what you try to do when you're trading, is to find the easy patterns. Don't try to find the hard ones. The hard ones, leave those to somebody else. That's the bottom line that you want to be looking at. Now, I also posted the chart for someone asked for a question on the Canadian dollar that we did last night. If you'll give me a second, I will bring it up. It's right here, because we just bought it again just a little while ago, but you'll see that it's had some over the past 3 days. It's had near perfect patterns. We had a 5-point reverse wave pattern occurring up at the top at 105. The market dropped all the way down to 104 in 1 day, which was a day and a half, which was $1,000. It did it with an ABCD pattern, which was absolutely perfect. The market rallied last night to exactly the 61% retracement, and has come down to the 61% retracement again. So you've gone from high to low with perfect 61% retracements. Now, sometimes they'll go to 786, but when you have an ABCD pattern present there, that also gives you, more confidence that, yes, the pattern is actually working. But the main cross rates that I look at are all related to the dollar. It's the dollar to the euro, dollar to the yen, dollar to the Canadian, dollar to the Australian, dollar to the Canadian, and then dollar to the Swiss. So those are the main ones that I watch. I don't trade the New Zealand dollar ever, because the pip spreads can get pretty bad. Pretty bad. The question arises: who is your favorite Forex brokers? Well, most of them are pretty honest about it, because they have it's a no-brainer for them. When you buy it, they just lay it off to somebody else. It's like being a giant bookmaker. So as long as your PIP spreads are okay, you should be okay. FXCM is pretty good. Gain Capital is very good. GFT Forex used to be pretty good, but they only take multi-million-dollar accounts now. And you can't open an account for Forex trading at Goldman Sachs or J.P. Morgan or Morgan Stanley with less than $1 million. But the smaller Forex banks are quite fair, and they do have a lot of education on what Forex is and what you have to do and what your responsibilities are, and you'll be able to see that's it. The question arises: do I ever trade the futures currencies? In other words, the currencies that are listed by the Chicago Mercantile Exchange on Globex? And the answer to that is yes, I do, because the PIP spreads there don't exist. You can literally go and buy at the market, and you can see what the market bid and offer is, and you can buy at the bid and sell at the offer. Whereas on the Forex, you have to give that up. That's how they make their money. They make their money on that PIP spread. And if you're trading $12.50 a pip on the euro and you're paying 2 pips, you're paying a $25 commission. If you do that at the Chicago Mercantile Exchange through the Globex, you're only paying $4. So let me figure this out. You're either going to pay a $25 commission or you're going to pay a $4 commission. I'll do the math on that, and I'll get back to you guys in a day or two after I figure out which would be the best. But and the CME it's an exchange. It's a legitimate licensed exchange by the NFA and the SEC and the Security Exchange Commission. Forex not regulated by anybody. They get their hand slapped occasionally by the regulatory business so that they can stay in business, but they're not regulated like they are with the thing. They don't go into their offices in a Forex bank that's off the coast of Bangladesh or someplace like that. They're like the online poker players. You got to catch them if you're going to try to find them. So that's the real thing that to see if you really do that. So man, I tell you, somebody in that room, somebody in the Tiger TV room today must be on some serious medication, because they asked if I rubbed my top of my head and rubbed my belly when I trade, and just like the Buddha. No, but I have a Buddha tree, a Bodhi tree here in my garden, and each day I go out into the garden and I sit under the tree to find enlightenment. And sometimes if the lightning is not striking, I get it right, but sometimes the lightning strikes and I get it wrong. You never know. Okay, let's get back to, we've talked about Forex. I think that's enough, but there's a lot of things to learn in Forex. You just don't go in and, pick it out overnight. I mean, you've got to, it takes, like I say all along, it takes about 3 days to become a professional trader. And you want to be able to at least give that full 3 days so that you're able to understand, where you're supposed to be. That's the main thing that you want to keep in mind, folks. Some of these stocks, I think I posted the IBM chart. I want to post it again just to talk about it, because there's something not right with this Dow Jones Industrial Average. I went through all 30 stocks yesterday, and some of these stocks are in absolute flat-out bear markets. I mean, they just look horrible. Cisco, IBM is in a bear market. It made a 3-drive to a top pattern way back in March, and it's dropped, well over 15%. And we've had lower highs ever since March, and we're making a 61% retracement today, exactly in IBM. So that's another, there's just a lot of things are just not right in some of these things that we're looking at, with the stock market. So just be really careful up in here. That's the bottom line of what I'm trying to maybe I'm trying to scare you to death without any reasoning or not. I don't know, but I just see this stuff so clearly. It just scares the hell out of me. I know hell is not a good word for the radio, but it's better than some of the other words that I use quite often in this business. So we should be thankful that I'm not using some of these other words. I want to, if I can get Cisco in here, I wanted to show, I don't have Cisco here. The Tesla, someone asked a question about Tesla. This stock has got major problems, boys and girls. I mean, I don't know what it is. it's something far worse than the fire, or maybe the fires are what's really doing it. But, we've been heading down, and we've had these huge gaps. And, Tesla, rallied a little bit yesterday. Now it's giving it all back again today. It reminds us of what happened with Apple when Apple started down. It had all the good news in the world, and then look out. It just started to drop. I don't know what happens. We'll have to wait and see, You guys are cracking me up today. I'm not going to join the comedy tour. I'm not that good. I do have some good jokes, but unfortunately, they can't be told in mixed company. So we won't do that. I just try to keep it alive here, folks. You don't call in. You don't ask me any questions. What do you want me to do? You want me to play my harmonica? I'm very good at it, and I can play the accordion too. But I'm not going to do that. I'm going to try to talk about the markets. Okay, let's move on and talk a little bit about the New York Stock Exchange, the Dow Jones Industrial Average. I just want to show it to you on the. This is why I think we've still got a chance for one more big high up in here, because of the fact that this is the Dow E-mini that I'm going to post, and we've been here for the last 3 days. Between 1,600 and 15,900. 1,600. That's my ultimate objective. 16,000 is the price that we're looking at on the upside, and 15,900 on the downside. Just 100 points, which is basically nothing. And so my assumption is we're going to have one more push to the upside, because the bulls are certainly in control. They're basically they're giddy because they have everything going in their favor, all the margin debt, because the money is really cheap, so they can borrow money very cheap to buy stocks. And of course, we know that when you borrow money with stocks, it's a good deal, because when the stocks go up, you make a lot of money on borrowed money. Such a deal we have here in the United States. I think it's really a pretty good move, but I believe we could easily make another 100 points in the Dow. I'm going to put this in here and show you that we can make 16,040, maybe 16,100, maybe 16,200. Whether the NASDAQ will make a new high or not remains to be seen, because it's been by far the weakest of the group and doesn't appear like it wants to rally very much. Part of that is the fact that we're seeing weakness in the two leaders, Amazon and also Google. Also, Priceline is showing that same pattern that we have in Google and also in Amazon. And Apple just looks just doesn't look very good at all. That's one of the stocks that we been following for a long time here at TFNN, and we should have been at least up to the $562 per ounce level, which would I'm trying to mix these stocks with commodities, folks, so bear with me here. The 61. I'll be back after the break.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we've got our caller coming in. This is my lucky day. We've got John from Philadelphia. John, are you there?
Hey, Larry, thanks for taking the call. Larry, I wanted to ask you a real quick one on bonds. On the weekly in particular, I have to tell you I owe you a debt of gratitude for this summer, like August, as the bond market was coming down into the 130, 129 area. You were the one who pointed out, and I had failed to notice, you pointed out how on the weekly bond chart, the ZB charts, 129, 130 was the fib 618 support mark. My question to you is if bonds come down and break that level now, that fib 618, can you tell me what your assumption would be, the implication of such a break?
Well, we know that'll mean higher interest rates for sure, and if you did because this last rally we had was a perfect 382, that would take you down to 114, and that means rates would be getting close to almost 5%. And I don't see how that would be bullish to the economy, but, maybe it would be. I don't know.
Larry, is that did I hear that right? If you break that fib 618, you're thinking 114 would be in the cards?
Yeah, I just posted in the Tiger TV. The ABCD on that would measure down to 114. That's the same thing that we've been doing in the gold on the way down, John, is every one of these rallies has just been more pathetic than the other one, and so it's telling us it wants to go lower. This year, this past year, the commodities have broken first, In 2008, you know, it was the stocks to break first and then the commodities. But, you know, someone asked me if I was bearish. You know, I'm just scared. I'm scared. I'm really scared what I'm looking at. I'm not just bearish. John, I've got another caller that I got to get in. He's been waiting for a long time. Is that okay?
Thanks, Larry. I appreciate it.
You got it, buddy. Who loves you? Anyway, listen, Rocco, are you there?
Hey, how you
doing,
Larry?
What's up, dude?
Thank you.
How are you?
Thank you. We've talked on email, but we've never talked in person.
I know that. I recognize Rocco because that's a very strong Italian name, I think, isn't it?
Yeah, it was my father who was born on St. Rocco's Day.
Oh, wow. That's cool. What can I do for you, my friend?
I had a quick question regarding the Bradley model, and I see your model, and I'm looking at other versions of the model that seem to bottom out in the 1st of January. I had bought some put positions all the way out to January to try and catch that January 1st bottom, but I'm looking at your model goes all the way through February. It looks like 4th or 5th, and I'm just curious as to how would you handle that?
Well, Rocco, you know, remember the Bradley model is a really rough guideline, and mine actually comes in the 3rd week of January. So if you've got January puts, they'd be expiring then. That would be about the exact time that you'd want to be having them. So I think you're set up correctly. The market's gone higher than I thought it could go, but you know that happens all the time. So if it starts down, and you know we've got this big date coming up on Friday, maybe it's today with the Fed coming. I don't know what it'll be, but once we go below the previous week's low, then we're going to be looking at something dangerous. You know, you look at the Dow Jones over the last 3 days, we've been in the tightest trading range we've had all year almost. I mean, it's been nothing. I mean, so this is going to be really quite amazing, either to blow off to the upside or it starts to sell off.
Yeah. Well, I definitely.
But I think you're positioned with the right puts. January, they expire the 3rd week, and that's when the bottom of the Bradley is supposed to bottom.
Great. What do you think about this 2014? It looks like everything's ramping back up.
I can only go about 6 months in advance because I have to be able to see what the market's doing at that time, and then we'll go from there.
Well, I appreciate everything that you do, and God bless.
Hey, thank you. Live every day in an attitude of gratitude, and may God bless everyone. Thank you.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.